Looking at the Markets with David Moadel. Welcome to Looking at the Markets with David Moadel. Today I wanted to talk about how I like to set up vertical debit option spreads, and I do it differently than most people. So let's talk about that. Initiating a vertical debit spread is a simple but effective way to make a directional bet on an underlying asset, such as a stock or ETF or whatever. Vertical means that for the bought and sold options, the expiration dates will be the same, the underlying asset will be the same, for example, they're both Apple, the type of option, call or put, will be the same, and the quantity of the options will be the same. For example, if you're buying 5 calls, then you're also going to sell the same number, 5 calls. But the strike prices will be different. That's what makes it vertical, a vertical spread. The only thing that's really different between the option that you're buying and the option that you're selling is the strike prices. They'll be different. Pretty much everything else will be the same. And it's a debit spread because you're paying out money in the beginning in the hopes that the value of your option spread will go up and you'll be able to hopefully resell your option spread for a profit. So here's how I like to set it up. I like to buy in the money options because they are, in my opinion, higher quality options. They tend to lose their value less quickly when the underlying stock goes against you or just goes sideways. All in all, in the money options are a safer bet. And I like to sell out of the money options because they are, in my opinion, lower quality options. They tend to lose their value more quickly when the underlying stock goes against you or just goes sideways. And so I do it differently than most people. I think most people buy out of the money or at the money options. Not as many people tend to buy, from what I've seen and witnessed, most people don't buy in the money options. But to me, those are the higher quality ones, and I like to buy quality stuff. And if I'm going to sell, I don't want to sell quality options. I want to sell options that are going to deteriorate more quickly, and so I sell out of the money options. So let's look at some examples of the behavior of these options. All right, so here's an Amazon call spread, and it's a debit spread because you would be paying money in the beginning in order to gain a profit, hopefully later on. And it's vertical because the type of option is the same. We're buying a call and selling a call. Same underlying stock, Amazon and Amazon. Same expiration date, April 21st and April 21st. The only difference is the strike price. Oh, and the same type. They're both calls. The only difference is the strike prices. Okay, so you've got, well, if Amazon is right now selling for, Amazon stock is selling for $849.28 per share, then I would be buying, as I mentioned, in the money, such as the $800 strike call, and selling out of the money, such as the 900 strike call. All right, so buying in the money, selling out of the money. Buying the good stuff, selling the junk. I'm not saying that all out of the money options are junk, but to me, they're usually not high quality. All right, so, and notice the behavior, okay? Amazon was pretty much flat today, went up a tiny bit, Amazon stock, and the in-the-money call went up in value. The out-of-the-money call went down in value, and that's good, okay? So you're making money both ways. You're making money on the bought or purchased call going up, and the sold or short call going down in value. That's good and good. They're both good. All right. Let's look at some more examples. Here's Target. Right now selling at $57.85 per share. Bought the 55 in the money call. Sold the 65 out of the money call. Target was again pretty much flat. Went up a tiny bit today. And look at that, the in the money call went up in value. The out of the money call went down in value. That's what I'm looking for. Okay, and that's why I buy in the money and sell out of the money. Here's another example. Tesla, currently selling at $251.54 per share. Bought the 240 call option in the money, sold the out of the money 270 call option, and look at that. The Tesla went up today, and the in the money call option behaved as it should. It went up. The out of the money call option went down. Even though Tesla stock went up today, the out of the money call option went down. That's why I sometimes call out of the money options junky. I call them junk sometimes. They're not all junk, but in this case, we can see that they don't behave well in many cases. If the stock goes up, a call option should go up, but out of the money doesn't behave well all the time. Whereas the in the money call option did behave well today. All right, here's another example of that, of how in the money options tend to behave better than out of the money options. Oftentimes. This is Visa, and it's currently selling at $88.79 per share. This is the in the money call option, 82.50 strike, and this is the out of the money call option, 100 strike. And Visa stock went up today, and the in the money call option reflects that. It went up like it should. But look at the out of the money call option. It went down, even though the stock went up. So that's why I buy in the money and sell out of the money. I just prefer the behavior of the in the money call options as opposed to the out of the money. So I hope that gives you some insight into how I like to set up vertical debit option spreads. They're really a great stock replacement tool. Instead of buying 100 shares of stock, it's a great alternative, and it costs less money up front in most cases to initiate a call spread. Okay, or you could, instead of shorting 100 shares of stock, you could initiate a vertical debit put spread. And we did not show any examples of this today, but it's the same principle. Buy in the money, sell out of the money. So I hope this was helpful to you. If you like this video, please give it a thumbs up on YouTube and leave comments. And also please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you'd like some help, or if you have questions about options, stocks, or if you just want to put together a trading or investing plan because you really need to have one, you can email me at any time. My email address is davidmoadel@gmail.com. Thank you so much for watching and listening, and I'll talk to you again soon.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.